I'm amazed how many people own stocks.
Welcome to the Playing FTSE podcast. My name's Paul, and each episode, me and the lads get together to talk about the stocks, stock market news, and finance in general. Quick disclaimer, you shouldn't consider anything in this podcast as personal financial advice. If you need such advice, go to a financial advisor. And please remember, when investing in any form, your capital is at risk. So sit back, relax, and let the lads fill you in with all the stock market news of the week.
The sucker's going up.
Welcome back, everyone. Welcome back to the Playing FTSE podcast. Today with me, we've got Steve D, Steve W, and Zach. Everyone's been having a bit of a rough week, I think, in the stock market. It shouldn't be news to anyone that we have seen a bit of a drop in the Nasdaq, and I'm sure that has made some people feel a little bit rough about their stocks. Anyone been buying anything this week in the dip? Anyone?
Yeah, I've been buying a couple of little things. I mean, I actually sold something just before the kind of worst of the dip came out. So I sold Applied Materials, which is a semiconductor equipment company. And I picked up more of my favourite stock at the moment, which is Kirkland Lake. Because I like stocks that go down instead of up at the moment. But it feels like it's really good value right now. But yeah, that stock in particular has been about as rough as you sound, to be honest.
Yeah, I've just put that out there. I'm pretty ill today. I'm sweating buckets right now. I think I've got a bit of a Barry White voice as well. So, yeah, I'm going to be a bit rough. You guys are going to have to carry me a bit today. Speaking of semiconductors, actually, are the semiconductors... There's a few bargains out there at the minute in the semiconductor world. Anyone looking at any at the moment? I just thought, when you mentioned that, I was looking at Broadcom, and I think they're pretty undervalued, to be honest. But all the semiconductor stocks are coming down, ASML, that sort of thing. Anyone thinking of picking those up at the minute?
I've bought one. I've been taking a look at Marvel for quite a long time. I've admired it all the way through the 40s and into the 50s, and I think it's almost a best of all kind of players. They're in the 5G market. They've just bought Infi Semiconductors, which is they're a data center semiconductor, a stock I used to hold, and yeah, I've took the plunge, and I am now a Marvel stock owner. It's only a small position at the moment. I'm still looking to flesh it out. It's had a terrible day, which is great because I've been adding it. But yeah, I'm quite impressed with Marvel. I think they're a real turnaround story, and they've got some good margins as well, generating a lot of cash.
I mean, I've noticed the dip this week, but I've not bought anything yet. But I am looking into getting more into the Bitcoin mining. So I should be doing that tomorrow. I'm looking at Argo again. There is another one called Bitfarm, but Trading 212 doesn't seem to have this stock on, so which is a bit of a shame. It's similar to Argo, similar market cap as well, and it has a higher hash rate than Riot blockchain. So
you love your Bitcoin, man. Have you been on this massive dip in Bitcoin? I mean, I don't think it's going anywhere. I think Bitcoin is probably going to go back up. I'm looking at a time of getting out about September, but are you still very much in your blockchain?
Yeah, no, I'm still bullish on Bitcoin. I mean, there's a lot of more parties getting involved now, and they're trying to add it onto their balance sheets as well, just to be cool. So, I mean, we'll just see after. We'll have to see where it goes.
One big sector that's been having a lot of problems is renewable energy. That's been having a bit of a rough time. Specifically, INRG, I noticed it's got to be down, 40% on the month? So 22% on the month. That's a bit rough. I got out of INRG. Is this all down to the problems that they're having in Texas? Is that?
I think that's going to be part of it, certainly. I mean, there is, until today, kind of midway through the session today, there'd been a fair bit of kind of downward pressure on stocks in general. But INRG is a tricky one. I mean, I understand the attraction, definitely. Like 100% clean energy. The world needs at least one of these companies to work, quite plausibly. And there's a sense in which they do, but when I was looking at the ETF, I really struggled to find it that attractive. I'd love a different renewable ETF somehow that's somehow weighted differently. Because I looked at this one and it's 10% plug power, basically. And I struggle with plug a little bit. I mean, it's been going absolute gangbusters for the last year. It's up like 735% or something like that. But with my kind of value hat on, I really find this one quite difficult. I mean, its revenue's gone up from 19 million to 308 million, which is nice over the last 10 years. But its shares have gone up from 13 million to 310, so its actual revenue per share has gone down over the last 10 years because they've had massive amounts of equity printing, more or less. And you think, well, maybe at least you could buy some of those back, but then you can't do that because the share price has shot up. They've got a deal with Amazon as well, which I was looking at and was kind of encouraged by, but I was listening to a guy called Anthony Iser on the ITPM podcast who was talking about this. Does a much better job than I can, by the way, on this. But there's kind of a catch built into that Amazon deal, basically, and that Amazon picked up around 55 million warrants, I think, for plug stock, buying at around $1.20. So Amazon took charge of around $528 million worth of products and $3 billion in warrants, and gave plug back $600 million and $99 million for the warrants. So, I mean, the winner there looks like Amazon to me, to be honest, by about $2.5 billion or something like that. And if that's kind of how you have to sell products, because Plug's an early stage company, I feel like their hard work's ahead of them rather than behind them at the moment.
Yeah, its market cap has ridiculously increased this year, hasn't it? Something like 1,500%. And I'm guessing at the moment, though I haven't really got involved in Plug recently, I'm guessing they must be issuing shares at the moment to get a ton of money back on that massive share price spike. Just looking down the list of
I've just seen Gamesa, Siemens. I've just seen also they've gone down by 14% over the past month. That's a lot less than the entire ETF, right?
I think a lot of these companies are just struggling at the minute. I managed to sell out of this. I couldn't stay in this. It was just way overvalued. I think I managed to get out sort of 150% up, which was quite nice. I've just totally fluked that, timing that on the way out. But
I wonder.
Yeah.
I mean, looking down that list as well, there's some really good companies that have just investors. I wonder if
I think there's only two companies that I can see there that off the top of my head are actually profitable.
Mm-hmm. Yeah,
I think that'll be Vestas and Gamesa. I think First Solar have lost money in the last 2 years. And Phase, I'm not sure if they're profitable. Zinyi aren't. Plug Power, I don't think are. Verbund aren't. Ormat aren't. So yeah, it's quite a worrying list really. When you look at that, you're adding all those together. You've got nearly 60% of that. At least 50% of that is unprofitable.
I wonder if people actually look into the holdings itself, as opposed to just getting the ETF.
I mean, this is one of the first ones that I looked at when I had this idea that I would find companies by raiding through ETFs. And that led me to Enphase, which I think at the time, certainly, I don't know what's happened in the last year or so, was profitable, because I seem to remember thinking it traded on a P2E that I found much more attractive than the second biggest holding, which at the time was Solar Edge, actually. First Solar was third. And that sort of ended reasonably badly for me and put me off things that have small to medium caps, because if you go for bigger cap things, you're a lot less likely, I think, to get subject to short attacks, because people actually know more about the company and they're less likely to just turn out to be a shed or something like that.
It is amazing how much the weightings of this ETF have changed over the past year. It looked nothing like this when I first started buying into this ETF, and now it's just like you said, it's just gone to and become a very, very speculative ETF. Not that it wasn't in the first place, but now it's just a hugely
just green memes.
Yeah. But
of the turbine green memes.
Yeah. have the turbine companies had a bit of an issue with this Texas news then? Or what's been going on in Texas? Does anyone know? Because I don't know too much about it myself.
Wasn't it basically the beast from the east kind of situation here, where they said a lot of the turbines froze over and hell broke loose?
Yeah, essentially they've had a vast sort of snowstorm hit Texas in general, and because they've cheaped out on the turbine blades and not used carbon fibre blades, they've all frozen, and that's caused a sort of a shortage of electricity. But also people are staying in and using a lot more electricity. So when you're not generating enough electricity and you're using a lot more electricity, there's going to be a problem. But Texas won't share grid, so it doesn't take power from any of the states. So that's another problem, and also it's an oil state, and any political advantage that they can get over non-oil energy products has led to the politicians being out on the streets saying, this is what solar power gets you, and the truth of it is this is what, when you skimp on green energy, this is what you get when you have a flash snowstorm.
Yeah, it's been really bad. They've been boiling water and stuff.
Sorry, it's more than that as well, I think. I mean, Steve's dead right that politicians going to do what politicians do. And if you're a Texas politician, I mean, it would behoove you to start coming out and talking negatively about green energy, because people who vote for you would like you to do that a lot. So that's kind of all natural and to be expected and stuff. I mean, I thought I was reading that it wasn't just a failure of green energy, it was also a complete freezing of sort of natural gas pipes and that sort of thing as well, which meant that it kind of overlooks the idea that this isn't just a green energy failing.
Yeah, that's it. It's like Texas is a hot place. Like they're not prepared for this sort of thing. So surely it's all energy that's gone down here rather than just blaming it on the green energy stuff. I'm sure I saw something that it was only 25% of the energy that was delivered is delivered by turbine, like wind turbine, and no one knows where the other 75% of the energy has gone, and it's all down to the failed oil and gas systems that are there as well. From one hot place to another, we're going to go with Australia, because Facebook's been getting in trouble with the Australian government. Facebook, in case you didn't know, Facebook and Google have been getting into a fight over the past couple of months with the local news authorities, and the local news authorities have been saying that Facebook needs to pay to use its content on its website, and Facebook basically said no, we don't. And Facebook then basically have held the news websites to ransom, basically. What's been going on there?
Some sort of blackmail situation, I think, with the federal government. I think Facebook are playing a weird kind of strategy. It almost reminds me of the WSB kind of thing that went out about 2 weeks ago, and it kind of mimics the same kind of flavor. So they basically said, no, we're gonna stop everything. That includes all the charities, all the kind of the key companies, even the emergency services pages, and that basically backfired on them because they've opened them back up again. But it doesn't.
That's the problem, right? That was what I read. I think was basically in Australia, what counts as news is very, very broad, and there's certain things that no one is allowed to stop sharing, sort of like fire, police, and stuff like that. And Facebook really couldn't filter all that. In contrast to Google, I think Google gave up straight away because it felt that the system was way too broad, and it just couldn't selectively say, okay, this news website needs to not be shown, but this news website can. It's something to do with the Australian government, right? What they class as news.
I think Google was underpinned by ad revenue from the get-go, right, with the search. I think Facebook obviously was with the social side, and they came into the revenue kind of ad streaming side afterwards. But Facebook said, if media is publishing news, that's their problem, right? Why should we pay you guys if you're going to publish news anywhere?
Yeah, I mean, Facebook's idea, I think, is that the media outlets do well by appearing on Facebook. Facebook would normally charge people for kind of advertising space on these sorts of things. They regard it as a kind of privilege of a sort to appear on their platform, I think. I mean, for Google, the idea of paying for news, if that's something that was asked of you, made more sense to me, in the sense that when I go looking for stuff, I go looking on Google oftentimes to find out what's happening in news, and if I thought the news coverage was less good, I might try and look somewhere else, I suppose. I don't look on Facebook for the news particularly, but in general, Facebook's been driving...
You end up getting your auntie just sharing some...
sorry, I don't go looking for like news that many people might be interested in on Facebook. I use it to kind of fill time and that sort of thing. But I mean, Facebook's been driving me mad. They had their kind of Cambridge Analytica thing, which depressed their earnings. So if you look at their earnings chart for a few years, there's a kind of a dip around the 2019 area. Their earnings in 2020 were very good. They appeared to have got that behind them, managed to get their operating leverage back. Everything's going nicely again. I thought, oh great, Facebook is back on the rails again. And then since then they tried to pick a fight with Apple, and now they're trying to pick a fight with Australia. And they seem to be just incapable of getting on with things quietly in the way that I kind of like companies to do. They seem to want to just wind everybody up, which is sort of annoying.
Yeah, it felt a bit like the diapers.com sort of method, where Amazon decided to really squeeze out diapers.com by running it at a loss for a long time. I felt like this was what Facebook were trying to do to the Australian news media, basically. They were just basically saying, okay, if you really, really want to push it with us right here, we can just squeeze you out. We can just stop sending all the news to your website, because that's what Facebook is. It's just a pinboard for everybody's news and everyone's opinion. And I'm really getting fed up with Facebook, to be honest with you. I'm always hovering over the delete button with it.
Out of the two, I think Google was more inclined to kind of go with what the government was saying, because 53% of ad revenue is accounted for Google and 23% for Facebook. So they were obviously making far less than Google was making. So they were like, okay, we can throw the toys out of the pram, essentially, from the two. I like how Google said, basically, we owe your economy 39 billion. Like we give your economy 39 billion, and then a think tank just comes out of the blue and says, no, you're lying, essentially, on news as well. It's quite funny. What I have a problem with, I mean, say for example, if Google left or stopped their services in Australia, it would have had a massive effect on the small businesses who use Google for like advertising, and essentially it's talking to one amongst the other businesses as well. I think, how would have Google essentially paid these companies for all the money that they've spent?
Well, we're getting into a conversation here about how much power Google and Facebook have over everything. I was really worried about how this would spread to the rest of the world. If Facebook really did just stop showing news in Australia, then the rest of the world would have to suffer that as well. And I was thinking with this right now, with Facebook changing its mind and actually probably now going to pay the news outlets for sharing the news. Is this going to open up something to the rest of the world? The UK news outlets going to go to Facebook? Oh, you know what? That sounds like a pretty good idea. How badly is this going to affect Facebook's revenue?
I think they will. I think it sets a precedent for rest of the countries to do the same, I guess, because I mean, some of these companies obviously operate globally, Reuters, even Sky, but Rupert Murdoch's going to get paid for all of the news that they publish in Australia. Why not in America or the UK as well?
One of the things I think is that when you're a controversial sort of company like Facebook are, and they sort of leap from scandal to scandal, one of the best things you can do is just lie low. And Facebook starting a fight with Australia is not lying low, because there is politicians in every country in the world that want to take Facebook down a peg or two. And they're not going to do themselves any favours by starting political wars, because everyone will just rally against that, and they'll end up paying half their advertising to papers, which I don't think anybody wants.
Especially how anti-China Australia is as a country. I think this doesn't really favour Facebook well with their privacy.
The thing is about Facebook and Google is that in the territories where they're not in, somebody else has just assumed the position of them. So as much as you say they've got a lot of power, they're still at the whims of the politicians. If the politicians were to ban Facebook in the same way that Facebook is banned from China, then something else just comes along and assumes the position, and that's the worry.
I was thinking that, like, if Google completely shut down in Australia, or Facebook decided to completely shut down in Australia, that would create a vacuum, because it's a necessary product, isn't it? It's Google is a massive part. I mean, what? Or are all of Australia going to start using DuckDuckGo or something?
No, they'll start using Baidu.
Kangaroogle.
It's funny you mention this, because Bing literally said, "Oh, we'll take the Google spot," and an analyst worked out it would need 3 to 5 years for it to actually position itself.
Yeah, I mean, this sort of speaks to Steve D's point where if no one really likes you, just keep quiet. I mean, no one uses Bing, do they? Sounding off and saying, "It's all right, we'll take over." Yeah.
Is Bing Microsoft yet?
My workplace uses Bing.
Unless they've spun it out or something, then yeah.
No, Bing has a lot to do with the SEO stuff and the Google Ads kind of competing service.
All right, let's move on to the flesh of today. We're going to start talking about some of the, because it's 13F month this month, and some of the big 13Fs have come out. First of all, we wanted to have a chat about Berkshire Hathaway, Warren Buffett's massive company. What have they been buying? Because it's quite surprising. That was my opinion of it anyway.
Do you want to touch on what a 13F is first?
Yeah, go for it.
Go on, Steve.
Okay, fine. So every company who is over a certain size in terms of assets under management has to file a 13F every quarter. Roughly details what they're holding at the end of that quarter. So what we're looking at now is what Berkshire Hathaway and indeed other companies, I think we've also got Scion there, were holding at the end of last calendar year. So this is correct as of 31st of December. Obviously, anyone there may have bought or sold anything since then, but this is their way of keeping us updated. I would note that it does not have to list shorts, I think, or short positions, rather. I think it does have to list put options, and it does list call options, and it lists equity holdings. But if you're interested in what Michael Burry is short, you should look at his Twitter, I think, rather than his 13F.
He deletes them straight after. Every time he shorts something, he just deletes it straight after, and they have to find it out from the news. Michael Burry is an interesting one. We'll talk about Michael Burry in a second. What we're looking at right here is Whale. What's it called?
Whale Wisdom.
Whale Wisdom. That's it. Whale Wisdom is the website that I usually go to look at just the highlights of the 13Fs. The 13Fs usually they'll come out about 45 days after these buys and sells have been made. It's just one of them things where you will not find out what anyone's been buying until 45 days after. So you've really got to guess. And what we've seen from Warren Buffett is, I mean, in my view, is really, really surprising. I just didn't expect some of these companies to be in this list. And I mean, they look like Warren Buffett type companies, to be honest. They don't look like Ted and Todd companies. Ted and Todd, by the way, are the two underlings of Warren Buffett who are going to take over whenever Warren. I don't think Warren Buffett's ever going to die, is he? He's just gonna live on forever, right?
Like a glass jar head from Futurama.
Yeah, just being a glass jar with Nixon.
Yeah.
So what's been going on? Anyone better at this than me? Explain what's been going on with Berkshire Hathaway's 13F.
Oh, this is really exciting. I can't believe you don't want to explain this one. I mean, last quarter, back between September and December, it came out that on their previous 13F, so the one covering Q3 from last year, I believe they had left off around 7 billion or so worth of equities, which caused a lot of speculation, a lot of thinking, a lot of guessing about what these kind of mystery positions were. And around the same time, some people noticed that approximately, I think, the same amount of Tesla stock had gone missing. And people thought, right, this is it. Berkshire Hathaway is buying Tesla, finally. Warren Buffett, who likes energy, likes utilities, is buying the renewables bunch. That turned out to be not quite right. It's in fact mainly mainly Verizon and partly Chevron. So close, but not quite Tesla in these situations. But yeah, I thought it was an interesting set of buys. I mean, the effect of what happens after Buffett starts buying things that everyone else has been looking at and looking past for a quarter or so. Well, plenty of people point out that there's lots right about these companies. I mean, Chevron, it's I think generally thought is the best of the oil majors, if you want an oil major. Most people don't. But it's sort of interesting in the sense that these are big buys, even by kind of Berkshire's standards. These are kind of, I think, something like 5th biggest and 9th biggest in that portfolio. And when you get past Apple, which is nearly half of it, there's not much then between the rest of them in terms of difference in amount.
So the big highlights really are buying of Verizon, which it's an interesting one that he's gone towards a telco. Considering everything that's sort of hanging around the telco. Although I had a good conversation with somebody in the YouTube comments the other day, Ted's World. He's great. He really shows me up whenever he can. He's really good. And he basically says it's pretty much the only telco that's really profitable at the moment. Its net income is about 3.5 billion, and it's. I've been looking through Verizon to try and figure out what Warren Buffett sees here. I see some undervalue, but I don't see that much. If we're talking about margin of safety and all that sort of thing, there just isn't that much. So Verizon surprised me. Chevron definitely surprised me as well. Who wants to own oil at the minute? He's obviously thinking contrarian. And the last one is that he sold quite a bit of Apple, right? What do we feel about that? Because whenever Warren Buffett sells something, usually he's going to sell out, right? That Warren Buffett doesn't trim positions as far as I understand.
Probably the battery life on the Apple devices.
I don't think he's ever picked up a phone in his life. I seem to remember when the 2008 bank crash happened, he didn't make a deal because one of the banks didn't fax him in time.
Yeah, I remember that. I remember him talking about that. And who's the other one that uses faxes? Dolly Parton. That's a really obscure fact that I know. Is Dolly Parton doesn't have a phone. She faxes everyone as well. That's a weird old thing, isn't it?
Is that just...
Yeah, there's
Sorry, Steve.
What's the racing guy called? The one from... He's usually at Silverstone, the old Eccleston. He uses a fax machine.
What the hell?
I had a tour of Silverstone, just as a side note, and yeah, the only thing in his room was a couch and a fax machine.
Yeah, it's just interesting that was Apple his buy? Is he one of the ones that picked Apple, or was it someone else in his company? It just doesn't strike me as a company that he...
I think it was one of his. I mean, this is... Obviously, we're going quite a way back now, so we're looking at when it was kind of on a P2E of around 16, I think, which...
Oh, yeah, it was well valued
help you
at
make
the time they
a bit
bought
more
it.
sense of the idea, I guess. But, yeah, I found the selling really interesting. I mean, I found Apple an interesting sell because this isn't the first quarter that Berkshire's been moving bits out of Apple. Nothing major, nothing kind of particularly eye-catching, but also nothing that they're required to do. So sometimes they do sell because they own too much of a company, and if a company buys back, that might push them over the kind of 10% threshold that you're not allowed to own over without being, in the case of banks, a bank holding company. But there's all kinds of selling going on here that's catching my eye. So General Motors selling, JP Morgan selling, Pfizer selling, Wells Fargo selling. Pfizer has not had very long, from what I can think of it, and he's actually bought more in the other healthcare areas, which is kind of eye-catching to me anyway. General Motors I kind of felt were quite good for the sort of near to mid-term future. Same with kind of JP Morgan and Wells Fargo. Actually, things seem to be generally going in the right kind of direction for them. And certainly when I kind of started investing, all I seemed to see was YouTube videos with Buffett telling us how wonderful Wells Fargo is and how Wells Fargo is going to be an amazing company. And yes, they've had a scandal, but they will put that behind them and they will be better for it. And I'm not owning them anymore.
I was going to say, there's an element of swing trading to the portfolio. As I would never accuse Buffett of such a thing, but there are stocks that he has held for, from 13F to 13F that have come in and gone, within the space of 3 to 4 months, which is quite unusual, really. His holdings tend to be fairly static. When people go, they go in full, and it seems quite odd that he's nibbling around in positions and he's buying tech companies. I would have Verizon as maybe a tech company. Maybe it's his 5G play.
It's a FTSE tech company.
Well, that's it. I was trying to figure out Verizon. Like, are they really getting into 5G with Verizon? I mean, it is. Obviously, it is based around 5G, but long term, I don't know. Even all of these telcos seem a little bit at risk long term, and they're all laden with debt. Every single one of them. He owns T-Mobile as well. Verizon obviously is probably the 5th biggest debt company in the world. Everyone talks about AT&T's debt, but I think that's about 150 billion at the minute. But Verizon's debt is easily 100 to 110 billion. So everyone's laden with debt. The interesting one was AbbVie. AbbVie's an interesting one to buy. Another one with a little bit of risk on the old story. Is it Humira, the drug that they have? They're going to lose the patent on, and they have a lot in they earn a lot of revenue from Humira. How much is it, Steve? You'll know the number, won't you? Is it like 60% Humira?
It's a lot.
It's a lot.
Yeah.
It
is.
I knew it in the week that we were talking about Squid. I don't know it in this week.
They're beholden to one drug which is running out of patent and a pipeline that looks a little bit shaky.
And they got quite a lot of debt, I think.
But if you run it on a discounted cash flow model, it is well undervalued at the minute. And is he just looking at the math and going, oh yeah, this is going to be it. This is how it goes. And it's worth mentioning as well, I think, at the end, is that Berkshire Hathaway still holds, I'm going to put this out there, as 145 billion in cash still. Is it more than that, or is it less than that? Yeah, 145. Right. That's off the top of my head. So he's still holding on to that. So I suppose we've never talked about Warren Buffett holding on to his cash. What's he holding out for? What is it? And is there going to be a dividend payment coming from Berkshire Hathaway? Ooh.
No!
Tesla!
And not Tesla either, I don't think. I mean, I think I was listening to Josh Brown on CNBC, who I thought had quite a good take on this that I'll just kind of rehash for you in slightly worse terms than he does. I mean, he notes that what we've recently seen is a lot of the Fed doing the job that Berkshire would traditionally have done. So we had a big kind of economic slowdown. Usually what happens there is companies get into trouble. In comes Buffett with his 9% convertible bonds. And that's partly how he ends up with equity in companies like General Motors, for one. If anyone was wondering kind of why he's buying them, he's not buying them on the open market, I don't think. I think this is a case of, here's some money, pay me a load of interest, and I'll take some equity at the end, basically. But with the Fed more or less just insuring everybody's bonds, and for as long as they continue to keep doing that, fewer people are interested in a 9% Berkshire convertible deal. When the Fed stops with this kind of thing, and I think it probably is when, then I wonder whether out comes the famous elephant gun.
Yeah, he's going to just spaff all over everyone.
Spray everyone.
Yeah, Yeah, that's a good take on it. That is, isn't it? He's just waiting for all of the quantitative easing to subside a little bit, and then he's just going to go out and he's going to take advantage of all the companies that are, what is it? Swimming naked is the famous term.
That's it.
That he has.
Wait till the tide goes out, then you'll see who's been swimming naked.
And I think that's what they're thinking. That's what Berkshire Hathaway in general. And I don't like to just talk about Warren Buffett with Berkshire Hathaway. I mean, Charlie Munger, in my opinion, has a very, very small influence on what Berkshire Hathaway actually buys. I think his personal portfolio in there is, I want to say 100 million. I think he only invests 100 million out of Berkshire Hathaway. But Ted and Todd are the new guys. Does anybody know much about them? Because I personally don't know much about them. But they're the reason for Snowflake. That's why everyone thinks. Everyone thinks that Ted and Todd are the guys that pushed Berkshire into Snowflake, right?
Didn't they also buy the bank, the Brazilian bank?
Stoneco.
Stoneco, yeah. Well, we would assume so. It's very difficult to tell, isn't it? I mean, it doesn't seem like it'd be a Buffett purchase, but you would be pretty safe to assume that they had at least some kind of influence into the Stoneco purchase.
I have this idea that one of them bought Barrick and then immediately got told to undo that again by the next 13F.
Yeah, just got a slap on the back of the head and went, "What are you doing? We don't do that." And then
Charlie Munger wandered in and said, "Look, I'm only here one day a year. Put that thing back where you found it. Get back on with buying banks."
Buffett's not doing any interviews at the minute either, is he? He's not been doing a lot of interviews. He used to do them all the time.
I think.
Has he had his COVID jab yet?
Yeah, it could be it, couldn't it?
I think Charlie's run out of his one-liners. That's why.
He did a phone-in that I saw with, again, CNBC, I think, where he was basically saying, or encouraging the US government to get on with sorting stimulus rather than wasting time wrangling over it. The thought being that, look, the longer this ticks on, the more damage we're doing. And if you're going to pass this in 10 days' time, can you not just get on and pass it now? But beyond that, I haven't heard much from him. I'm looking forward to the shareholder meeting in May. Sorry.
Do we think
Biden's trying to raise minimum wage, isn't he? He's trying to shove that through, so it just causes a lot of arguments. It slows everything down. What's Snowflake doing at the minute? Because there was a massive rally around Snowflake, and I've not actually heard of it.
As with any IPO, to be fair, I mean, every recent IPO, including Airbnb, massively overinflated, right?
I think I heard, I saw on Twitter, Parik Patel was saying that Snow is demonstrating its disruptive power all over the clean energy sector in Texas. But
Parik is just, he's just lovely, and he's been talking to Elon today, because I think Elon Musk has been in a fight on Twitter today. Has anyone seen that? It's just.
I was going to ask you about. I was going to ask about Buffett and Bitcoin. Is he going to ever invest in Bitcoin? Or will
you think Buffett's going to invest in Bitcoin, really?
Well, a lot of institutions like BlackRock have. I mean,
I think you had more chance with Tesla, to be honest.
Just looking at that Snowflake price is just crazy, isn't it? On screen, 269 at the moment, and I think Buffett got in at 120. Is that his average price? I think he's bought a little bit more afterwards, but
yeah, it was about 100. Yeah, I think 80. I think
it's a gift. What 120 was a gift.
It's interesting though. It's like looking at the year chart. It's it's had its run and it's all come back down now. So current price 269. What did it IPO at on? This is IPOing on trading 212, isn't it? At 253.
As people would say, it's consolidating, right?
I think it was 120 and it got uprated to either 140 or 160, which was about the time I bowed out of it, I think. I was really interested at 120. It's got a lot of things going for it. I mean, the risks they're quite severe, but you're the upside of Snowflake is potentially huge. But at 269, I think what does the market cap say in that poll? I think it's probably it's got to be over 100 billion, is it?
Say
82 billion.
Yeah. So I mean, I can't possibly value Snowflake. I haven't got a clue about it. It's just what exactly does it do? What exactly does it do? It feels like a Palantir. No one really knows what it does.
There's another company called C3 AI, right? Similar sort of
They're a
stuff.
little bit different. So C3 is spinning up like AI applications. So Snowflake is like a data analysis tool, but what it's really good at is it can stash your data across all the major providers. And basically you pay for a session. So you spin up a session. It's rather than you saying, to AWS, I need 500 users and they need to have access to it 24/7, and AWS come back and say, well, that'll cost you X amount of £1 million. With Snowflake, it's like a pay per user. So you spin up a session, you use it, and then you spin down the session and you pay for what you've used. And it is genuinely a very good program. They've got a really good onboarding team, so they do personal onboarding. They teach you how to use it, how to get the best out of the tool. And you can see that in the figures. There's a figure that software as a service companies release, which is ARPU, and it's average revenue per user. And you want an average revenue per user, if you can get 100% ARPU, that's good, because that means that every year you're getting the same amount out of your users that you used to have. And they've seen companies that come out, they sometimes have like 120 or 110 if they're really good, so they're getting an extra 20% out of their users every year on top of what they got the year before. I think Snowflake's is nearer 200, so their customers are doubling their spend with them year on year on average. So it is
Wow.
there's some quite like stunning metrics in there, but not an £82 billion valuation.
But it's definitely flexible for even small companies to get.
Exactly,
right?
yeah. But the idea is that eventually, as has happened with Elastic, which is another company I quite like, is that if it gets too popular, Amazon, Google, whoever, just make their own version, or they stop your access, or they limit your access. And that's it. You know what I mean? That's a third of the revenue gone.
Yeah, that's. I think ARPU is going to be the hot term of 2021, just like
Rundle
was in 2020. ARPU is going to be the hot term of 2021. Everyone's going to start learning. Oh no, sorry. The hot term of 2020 was last mile. Everyone was talking about last mile in 2020 because it's like this new phrase everyone learned. And everyone was going, oh my God, have you heard about this new last mile company? They do delivery and they do this. And like ARPU.
They have a drone on top of the van.
ARPU is going to be
whatever happened to that, actually?
It's still waiting.
Actually,
it's still, Workhorse is,
now that we actually...
is still waiting on
We
the
are
news.
what? Six months in. Whoa.
Yeah.
How can people wait for 6 months?
I wonder if we're going to get like ARPU rundles. Is that when we've reached like peak bubble?
Whoa, Jesus. Yeah. I think, ARPU's going to be a big phrase. ARPU's going to be, everyone's going to learn about ARPU this year. Everyone's going to learn about like how SaaS companies start to learn. I think Netflix is going to be the big one that's going to push out its average user, because Netflix is growing. Same with Facebook, actually. Facebook's going to be a big one as well. Facebook is growing, but it's growing into EM markets. It's growing into emerging markets, and you don't get the revenue per user in an emerging market system. So I think Netflix are going to have a problem with that. They don't think so. They think they're going to be able to keep their average revenue up, even though their new customer base is all going to be in smaller countries. It's just going to be the phrase of 2021. That's what I'm calling. I'm going to call.
Am I waiting for Pinterest to get on board as well? I think that's one company that needs to get their average revenue per customer up. I think they're still undermining. They're still down on the rest of the world revenue as opposed to the North America. So yeah, it's definitely a company I want to talk about one day.
I think Paul's probably nailed the title of the episode, though, this time. Everybody's going to learn about ARPU this year. Excellent.
Yeah, that's it. I think it's just going to be the word of the year.
Welcome to the final episode of the Playing FTSE podcast.
Playing footsie, talk about ARPU.
I just want to talk about Cyan Asset Management, which is Michael Burry's 13F, the 13F from Cyan Asset Management. There isn't much to it, but there is some really, really big news out of it, because I think a couple of weeks ago we talked about GameStop, and we talked about how Michael Burry's probably done very, very well off GameStop and the whole pump and dump scheme that we saw there.
Is he also mentioned the UK housing crisis?
No, he hasn't. Has he mentioned the UK housing crisis?
I'm gonna tweet him because the stamp duty is gonna come to a stop next month.
He probably gets really annoyed with that. He's like, I made one big bet on a housing crisis once, and now everyone wants me to bet on everyone else's, like on the Argentinian housing crash. But GME, it turns out, and I haven't got the data up here, but it turns out Michael Burry sold out of GME in December last year, a whole 2 months before the GME crisis happened, which means Michael Burry missed out on the entire run. He would have missed out on something like 500 million, I think it is. I think he sold with in a profit, but he didn't hold on to the run at all, which is the biggest news from Michael Burry's Cyan Asset Management. He's also sold out of Facebook and Google for some reason. Did anyone else have anything on Cyan?
So I think his biggest holding now has become, calls and Citigroup. There's a sense in which calls are or knowing that someone has call options as one of their top buys is kind of useless, because a 13F doesn't tell you an expiry or a strike price. So just to be entirely clear about this kind of thing, an option gives its holder the right but not the obligation to either buy or sell, depending on whether it's a call or a put, stock in a company at a certain price within a certain time. So if you own a call option, it will have a number on it and it will have a date on it, and you can buy the stock at that price before that time expires, basically. So without knowing what the strike price or the expiry on Burry's calls is, we're guessing kind of even more than we would otherwise be about Citigroup.
And he uses a lot of puts and calls. It's a very surprising amount. He's always making calls rather than just straight up investing in companies. It's worth noting he's still short Tesla as far as we know. They don't show them on the 13F people shorts, but we're still pretty sure that Cyan Asset Management and Michael Burry are short Tesla. Probably doing quite well at the moment, actually, with Tesla falling about 20%, something like that.
Yeah, makes up for the GameStop thing.
Okay, let's finish off with Zach's SPAC Corner. That's I'm gonna call that as a new feature. Zach's SPAC Corner. Woo! What we got today?
This is almost like a scrapbook. So I've been looking into a company called Arion. So they basically have not formed a merger or a SPAC with another company called ALTU, ALTU ticker symbol. So in one sentence, it basically wants to build the world's first supersonic business jet that flies point to point in 3 hours or under. It sounds, fictional, but then again, the SR-71 was supersonic in the 1950s, so it's not really out of our reach. But the main thing is they're trying to be green. They're coining the term green speed. Now, that's kind of all just marketing fancy fluff, right? What it has an AI-driven sandbox environment for basically designing and testing, and it's almost an exact doppelganger of the physical kind of the asset, or how a product will function in real life. And they're basically using it for the plane. So they're trying to have a supersonic plane which doesn't make a sound, so the sonic boom sound, so it doesn't cause any noise.
So how do they what makes this plane different? Sorry, I don't know anything about this company. I'm just looking through it now. What?
It's It's 60%. Basically, it's the Concorde 2. So because the Concorde, the program stopped after that.
I mean, that's
incident,
not
with
that's
the
not a
first
good
one.
thing. I was coming to that. I was thinking, is this Concorde 2? That's not a good thing in my opinion.
One of the issues they had with Concorde, remember, is that it could only fly over sea. If it flew over land, the boom would smash windows. So the idea with the Arion is that they're reinventing the Concorde, but they're making it super quiet. So this can fly anywhere it wants in the world. So it can fly from any point of the world to any point of the world, pick your furthest destination in under 3 hours. So it's meant to be a commercial jet for starters. So it's going to be, it's a more of a luxury commercial jet than anything else. But the technology is what is the groundbreaking thing here. I suppose Zach will want to tell you about the sandbox, but the sandbox is a very impressive piece of technology.
The Concorde was uneconomical. Concorde lost money every time it flew. That was the biggest issue with it, and the crash that it had. It wasn't really a crash. Was it really a crash? I can't remember. I don't think anyone died on the crash, did they? Or did they?
I think they did.
I can't actually remember the whole story, but after the crash, which grounded all Concorde forever, it was just more of an excuse because Concorde itself was completely uneconomical. What is going to make this properly?
Wasn't that more of two governments coming together, like France and England? Well, UK. This time we have big players. We have Boeing. We have NASA even. We have Siemens. We have a few more smaller companies actually. Some are not even listed on the stock market. So there's quite a lot of aviation companies involved in this. I mean, these are just the big ones I mentioned. But I think the most interesting thing is the way they're going to go to production. They're basically doing it all in the sandbox, doing it real-time changes. So anything that's expensive gets sorted out in the software side, and then that's when the plane's going to be ready. Once they've done all the niggles and stuff they've fixed up. I mean, there are weaknesses even in this play if it does come to the market as a SPAC. They start basically in 2023. That's when the testing starts, and they plan to bring it into service in 2025. I don't think anyone's going to be waiting 5 years, just to see whether it comes to fruition. I think that's one of the issues that's with this company. And the other problem was it was really difficult finding any financials on this company. I mean, I've only found one statistic, and that's the estimated revenue for the year of just $40.3 million. And being the kind of company it is, it's going to burn through cash even with their efficient kind of production models.
Is this a front run for ARK Invest Space ETF?
I guess, yeah. I mean, because Kathy is very bullish on, I guess, these suborbital space sector. So this kind of fits the idea. So, I mean, there's Virgin Galactic, but point-to-point hypertravel is the kind of the main key area of ARKX. And this definitely fits the bill, so we'll definitely have to keep an eye on this.
So what's
I do know.
Yeah, go on. What's the new technology of this company? Where what's the crux? What's the USP? Why are this company going to do better?
One of the things that they're doing, and it is really important to sort of like emphasize the sandbox. So what's happening is they're building a full plane in a and it is effectively a replica in a sandbox that will be a replica of the world essentially. So they'll be able to test every part of the plane before they even start to go to production. So in theory, their costs should be a hell of a lot lower than anybody else who's doing it. So one of the things I was looking at was GE have also adopted this sandbox engine on their latest jet engines, and they have found that if they simulated their engines into the sandbox, that they could take a point-to-point brand new engine design in around 10 months, and that is with stripping all out all the unnecessary bits, refining, and then manufacturing, and it normally takes them 3 years. So what this has done is it's almost a plane technology play, kind of in with a commercial jet play. It is a really, really interesting company. I mean, I think GE was saying that they managed to strip out 60% of the engine's weight in the simulation because they found out that they had I think it was a piece of 23 kilo shielding, which they found was absolutely completely unnecessary. And they managed to strip that out, and it saved them massive amounts of costs, massive amount of manufacturing times, and weight, which is one of the key aspects of a plane.
That's interesting because the mRNA companies that are out there at the moment, a big part of their strategy right now is AI and going down the routes of trying to simulate everything first. And I think that could be something good for the future, to be honest with you. And that sandbox idea really does sound like something that these companies are really starting to get into, because like you're saying, you're trying to find as many simulations of the planes first. So you're thinking they're going to sell this sort of sandbox thing to different companies and maybe make a business out of it that way?
They want companies to work with them. I think it's one of those kind of unique kind of aspects to Siemens and even GE now. So it's a way for them to kind of partner these smaller big companies that are upcoming, I guess. Just to make
You've got to remember that they've also got Spirit, they've also got, I think it's Dassault, they've got Safran as well, all partnering up with them at the moment. So there is already significant interest in what they've got, but they're also looking at future, making a completely green jet fuel. They've got a whole host of things on the website.
Hydrogen. I think it's called hydrogen, isn't it?
I don't think so.
The completely green jet fuel that they're trying to come out with at the minute.
Biofuel. They're using biofuel.
It's a biofuel that they're trying to make.
It's actually...
yeah, I think Shell was talking about that. They're making a lot more... they're trying to make biofuels
in
the minute.
November, they successfully finished wind tunnel tests. So it is something that's slowly coming to fruition, but it's going to be a slow play. I think, a few years. 2023 is when we're going to really hear about any testing. So,
has it got a SPAC in mind?
Yes, it's the
ticker for a SPAC?
Ticker symbol ALTU. Possibly. There's still. It's one of those Bloomberg kind of news headlines where we heard about this and that, but nothing's finalized yet. But it is.
That's
something.
Getting your information off Bloomberg at the minute about these SPACs is pretty terrible at the moment. We haven't actually talked about CCIV yet, but the idea, Bloomberg released an article saying that CCIV was going to be... I wish I had more knowledge on this one, because I just don't look at SPACs, especially from their inception. But CCIV was supposed to be valued at 11.5 billion on Bloomberg, but actually in the end it got valued at about 24 billion, and that's why we've seen the massive drop in CCIV. I think it went down something like 40% today. Were you guys in CCIV, or did you get out on time, and what's happened there?
I was out in time. I got to, when it got into the 50s, I halved the position. When it got into the 60s, I halved it again, and I was left with a 25% position. But my average price was $14 or $16. So it didn't fall anywhere near the sort of levels where I was in any trouble. I think there's a little bit of buy the rumour, sell the news. I think there's a little bit. The valuation was a bit of a heavy one, but they've also stuck news out today that they're not looking to be mass manufacturing for 8 or 9 years, and they've also put back the first car another quarter. So they've completely shafted everyone.
I think the supersonic plane SPAC is probably better. They'll probably get to manufacturing a lot earlier than these guys.
Yeah, I thought Lucid was supposed to be the next Tesla. I thought it was going to be bringing out cars really soon, and it was going to be straight up competing with it. But it's not, right. There's they're not going to have a car till 2029 or something. And
We'll do
what is the point in buying this company?
price to sales ratio.
What's
I
the
wonder
point?
what the price to sales ratio is right now. I'm actually
Infinity.
Well, it's got to be 0, right? Because they've never built a car, have they? They've never built or sold anything, right?
actually. Did you say they're gonna sell something this year?
Yeah, they're going to sell
I-
their They're building an expensive car first. I think it's about $165,000, and that's the one with the big range and all the headline figures that you're seeing on the adverts, 1,000 horsepower, blah blah blah. That's the one they're building for $160,000. The actual mass market car is Tesla-esque. It's like Model 3 level specs, but if they're not planning on mass manufacture for 8 years, what will Tesla and all the others be doing by then?
That was my
it
point.
remains
Like,
to be seen.
ICE companies are going to be well ahead of the game by that point, right? You know, you got Volkswagen, and they're queued up with QuantumScape, and QuantumScape reckon they're going to be mass marketing their batteries by 2025.
Yep.
So Volkswagen's going to have a load of QuantumScape batteries by 2025. This company, this Lucid company,
potentially.
are going to be dead in the water, right?
I mean, I can't see it being long-term investment because we still like if they're backtracking now on their dates for manufacturing. I mean, what this thing 7-8 years? Did you say? Like that's a long time. I mean, people were asking, "Oh, QuantumScape's going to come out on with batteries in 2025." That's like ages. Tesla is probably going to come out with similar sort of batteries next year, and 7 or 8 years is near impossible to kind of figure out where they're going to be or where's the rest of the market.
You've got to remember, when you're selling a £165,000 or $65,000 car, you've got to sell 5 times less cars to make any kind of decent revenue to somebody selling a $35,000 car. And I think that is generally the idea at the moment, is that the big car, the expensive car, is going to be the proof of concept to show them, it's almost like a tech demo. This is what we can do. And in the mass market of money, they've got some pretty hellacious backing from the Saudis. So yeah, they could be a hit. They could not be. Even at this price, I'm not interested in it. I think at this price they're valued more than Ford already. They're valued more than GM. I mean, I know that's the norm now, but it does feel like it shouldn't be.
Steve W, are you looking to swap your Ford for these guys?
No, my Ford's doing quite nicely actually. I have I don't often talk much about my kind of open positions, but I have one share in Ford that was free from free trade. There's currently nothing in my free trade account. I haven't actually looked since it started dipping, but that might make me really sad, I think. It was up about 45%, which I was quite pleased with for something that I hadn't really chosen or looked at. Doing better than the things I did choose and do look at, as is the way with these things, I guess.
Oh no, your portfolio is going to be doing really well this week, right? It's a very defensive portfolio. It's going to be.
Yeah, my port's doing all right, thanks. I'm going okay.
I mean, we've been hearing on the Discord that people are down like 30, 40, 50%, losing ridiculous amounts of money, and that's fine, because that's your risk tolerance, that's your game, right? And but I think yours will be very similar to mine. It just hasn't moved in any real way. It's
losing 30, 40 is fine as long as that is your risk tolerance. And I do sometimes wonder, when the way people talk about it, whether it really is, or whether they're just finding out that it's not really their risk tolerance, because it isn't mine. I would get shaken a bit by losing 30, 40% on something. It does mean that I never went up sort of 5 times like they have. They're probably still ahead of me slightly. I don't know, I haven't been paying attention. But I am at least happy enough with the kind of strategy that I've got. And yeah, it's been an alright week from my perspective.
That's it, isn't it? Though with volatility, it goes both ways, doesn't it? So if you're happy with volatile ups, you've got to expect volatile downs. And I think a lot of, I said it on the Discord the other day, I think a lot of young investors they've only experienced the volatility up. And the volatility down is like the worst thing in the world. There's nothing worse than logging into your portfolio. Like I remember during coronavirus when you logged into your portfolio and you were like, okay, well that's half of it, and then realizing you've you've not logged into Invest and you have actually logged into your ISA, and and the worst thing is that you then look at those companies that are 50% down and think, oh my god, I'm holding Aviva, I'm holding Lloyd's Bank, and well, so it's like one of those things is like when we say about like having conviction about what you own, the reason you need conviction for what you own is because when you log in and you're 50% down, you better love those companies.
Yeah.
Otherwise, you're just going to lose money.
Argo blockchain.
Yeah, that's. I mean, seriously, can people really have conviction in Argo blockchain? Personally, I can't. I know Zach does.
There's a lot of people who do. I mean, the thing, because he's got his own little niche, and I think a lot of people compare Argo with Riot, Marathon Pattern, a few new players now as well. But I will say, for anyone who's invested in Argo blockchain, if Bitmain does come into the stock market as an IPO, it's gonna absolutely shake up all the miners, because they make all the basically the machines that all these small miners are using. So if they make their machines and they're in on the game as well, it's gonna hit the fan.
All right, I think we'll leave it there. We're about an hour and 8 minutes into that one there. Thank you very much, everyone, for listening today. This podcast can be found on Apple, Google, Spotify, and I believe it's gone on to Audible now as well. If you have any questions for us, feel free to leave it in the comments below the YouTube video of this podcast, and let us know what you thought of it, because we've just freeboard it here. We've just kind of had a chat today, and it's been really enjoyable. So thank you very much for listening, and we'll see you next week.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.